Good evening, all the joinees. Thank you for joining in. Hi, this is Ashi. Welcome to NGEN Markets webinar. Meanwhile, others join in. Let us have a look at today's topic. So today we'll be looking upon screening and selection of mutual fund schemes. For that, we'll be using robust feature, that is query tab, that is available on the platform, and see how we can screen mutual funds, followed by risk and return parameters. That is something that we'll be looking upon. And finally, monthly SIP and lump sum comparative study across different time periods. Lastly, the forum will be open for a Q&A session. So this is the landing page of the NGEN Markets. For today's webinar, we'll be predominantly focusing on fund section as well as the compare section. So now I'll move towards the funds tab. Now, as soon as I move towards the funds tab, the first thing that you would be able to see is the screener that we have provided. Now, in the screener, you can filter the funds based upon the AMC, or you can filter it based upon the categories as well. So you can see that there are 4 baskets, which basically represents SEBI asset classes, and within which are the multiple categories that are listed. Now, onto the platform, there is no limitation or restriction. You can select as many categories as you wish. So for today's webinar, I'll be going ahead with small cap funds from equity as an asset class. Now to load these 29 small cap funds onto the screener, I will click on this particular checkbox. As soon as I do so, I would be able to see that 29 results have been loaded again onto the screener. Now to narrow the list down, what you can do is you can apply certain basic filter parameters. Now let us say we only want those small cap funds which have minimum AUM of 5,000 CR. So I will enter 5,000 right here. Now, once you do so, you would be then required to click on apply so that the system can take it into effect. Now we can clearly see that there are 15 such funds that have minimum AUM of at least 5,000 CR. Now let us say that we want to remove any kind of young funds from the list. In that particular scenario, we can use minimum age as a filter parameter. Now here I will enter minimum age of 5 and then hit on apply. As soon as I do so, we can clearly see that there are 14 such funds that have completed at least 5 years of age in the market and have minimum AUM of at least 5,000 CR. Now you can clearly see in filters that you can definitely apply or set in a minimum criteria onto the screener. But what about the maximum limit you want to set in this feature? So for setting a range, we have query tab that is available in the fund section itself, right beside the screener as an option. So this is the query tab, which is a robust feature onto the platform, wherein you can also customize your own screener for that matter. Now, the first thing that you would be able to see in the query tab is select plan. Now, as soon as you hit on this drop down, you would be able to select regular funds or direct funds. The next thing that you can see right here is the static filter. Now, within the static filter, there are various parameters that you can look upon and set in as a filter and apply range. Now, continuing with the example of small cap fund, in static filters itself, I will select SEBI category, and here I will search for small cap. Once I search for small cap, I will then hit on add condition. As soon as I do so, we can see that there are total 29 small cap funds. Now I will apply a statistic filter of AUM as a parameter. So again, I will hit on this drop down, select AUM, and now I will input the range. Now here, I want only those small cap funds that have minimum AUM of 5,000 and maximum can be up to 65,000. So I will enter 65,000 right here. So this is the band limit that I'm setting. And as soon as I hit on add condition, we can now see that there are total 15 such funds, basically small cap funds that have AUM ranging between 5,000 to 65,000. Now I want to only have those small cap funds that have completed the age of 5 years in the market. Now for that, what I will do is, again in the statistic filter itself, I will click on the drop down and select launch date as a filter parameter. Now here, what I will do is, I will keep the from date as it is, but will change to. Now in this to section, I will only change the year from 25 to 2020. So I will change this to 20. And then I hit on add condition. So only those funds will be taken under consideration that have completed at least 5 years of existence into the market. Now let us take one more filter parameter. So from risk, I will take Sharpe ratio. Now Sharpe ratio is risk adjusted return. So here I will be setting up a range between 0.2 to maximum Sharpe ratio being 1. Now again, I will click on add condition. Now here we can see that there are total 13 such small cap funds that have AUM ranging between 5,000 to 65,000 being maximum limit and has completed 5 years in the market and has Sharpe ratio ranging between minimum that is 0.2 to maximum having 1 as a Sharpe ratio. Now I will click on show 13 funds. Now, as you can see, the name of the 13 funds, the asset classes, and other 3 parameters basis the condition that we have applied. That is AUM, launch date, and Sharpe ratio. Now, this is just a one-time exercise that you would be required to do. You can anytime save this particular query by using save this query as an option. So once you hit on save this query, you would then be required to give it a name and click on save query. And then you can locate your query in load saved query as a tab. So your list will be right here. Also, you can take an Excel dump for the same. Now let us say that you want to compare these funds performance with each other and with that of the benchmark as well. So for that, it is very important that you have to take these funds towards the compare section. Now to take all of these funds in the compare section, you just have to do one simple exercise, that is click on this add these funds to compare as an icon, the weighing machine icon. So once you click on this particular icon, in just one click, all of these 13 funds will get loaded in the compare tab. Now, as these 13 small cap funds gets loaded in the compare section, here you can have a fair analysis. Now, as soon as you load any fund in the compare section, please note that the data would be since the inception. But here you have complete flexibility to put in a particular start date. So in the returns column, right beside this particular returns column as a word, I can see a settings wheel icon. So all you're required to do is click on the settings wheel icon, and here you can custom your own start date. So let us say that you want to analyze all of these small cap funds for the period of again past 5 years. For that, you would be required to click on this drop down and then select 2020 and I'll hit on 1st Jan. And then you're required to hit on go. Now, once you hit on go, there will be a prompt stating that a custom start date is being selected. Now, as mentioned, in the compare section, you can not only compare funds with each other, you can also compare it with the relevant benchmark. So this being small cap funds, the relevant benchmark for the same would be Nifty Small Cap 250. Now, how to add this benchmark in the compare section? In add other items as a tab, you can search for the relevant index. So I will search for Nifty Small Cap 250. And as soon as you click on the word, the index will get added in this blue color row right here. Now we'll be looking upon certain parameters and we'll start comparing the performance of the fund as well as with that of the benchmark. The first parameter that we'll be looking upon in the returns column that is represented in green color would be CAGR. Now CAGR tells us the average rate of return that all of these funds have earned on an annual basis. Now you can sort this particular funds basis CAGR as a parameter by clicking on the word CAGR. So you just have to click on this word and it will be arranged in ascending or descending order accordingly. Now here we can see as I click on the word CAGR, these gets arranged in highest to lowest order. Now here we can clearly see that quant small cap fund has the highest CAGR of about 14.4% in comparison to the benchmark that is having a CAGR of only about 25%. So this is for the period of past 5 years, and we can clearly see that quant small cap fund has not only performed better in comparison to its peers, but has also performed better in comparison to the benchmark, that is Nifty Small Cap 250. Now the next parameter that we'll be looking upon would be this standard deviation. So standard deviation tells us how deviated are the funds return from the average rate of return. So it indicates volatility. So higher the standard deviation, highly risky that particular fund is. And here we can clearly see that standard deviation of quant is also higher, which is to an extent of 21.36% in comparison to any other funds as well as with that of the benchmark. Now the next parameter that we'll be looking upon in the returns column would be cumulative return. Now cumulative return talks about absolute or point-to-point return. Now here we can again clearly see as I click on the word cumulative return to arrange it, we can again clearly see that the highest cumulative return or absolute return is by quant small cap fund for the period of past 5 years, which is to an extent of 485. This is higher not only again its peers, but also in comparison to the benchmark having a cumulative return of about 280 for the period of past 5 years. So we can clearly see that with a higher standard deviation, this particular fund is also generating a higher cumulative return. So this is something that is also reflected in its Sharpe ratio as well. So Sharpe is basically risk adjusted return, indicating how well the fund is performing in terms of generating return in comparison to the risk that it is taking. So we can clearly see that quant small cap fund has the highest Sharpe ratio, which is to an extent of 1.41%. There are multiple other parameters as well in the returns column. You can select accordingly and you can also sort this in ascending or descending manner accordingly. Now the next parameters that we'll be looking upon would be from the relative returns column. Now this relative returns column is represented in pink color. As of now, there is no data. So for the data to get activated, it is very important that you click on this particular checkbox right here. Now, as soon as you do so, the data gets generated, but there are two pieces of information that you have to keep in mind. First would be changing the benchmark, because by default, the platform captures Nifty 50 as the benchmark. You have to ensure that whatever benchmark you have selected for the return column should be similar to that of the relative return. So I will change this Nifty 50 to Nifty Small Cap 250. Now, as this gets done, the next piece of information that you have to keep in mind would be this start date. You have to ensure that whatever start date you pick up for the return column should be similar to what you will be choosing for the relative returns column as well, so that the analysis can happen in a fair manner. So again, I will change this particular start date to 1st Jan 2020. Now, as this gets done, the data is now ready for the purpose of analysis. The very first parameter that we'll be looking upon would be this cumulative excess. Now, cumulative excess talks about the excess return that is being generated over and above the benchmark. In simple word, it is alpha. So you can also sort this in terms of highest to lowest or lowest to highest. Now, as I sort this, we can clearly see that cumulative excess of quant small cap fund is the highest, which is to an extent of 267.31. Now, it's a simple procedure to derive this cumulative excess. This is nothing but the difference between the cumulative return that is generated by the fund when subtracted with the cumulative return of that of the benchmark. And this is how we derive to the cumulative excess. Now here you can also see that there are certain negative cumulative excess that is being mentioned. Now what does this actually mean? It means that there is no alpha as such that is being generated by these three funds. Now what are these three funds? First being Aditya Birla, second being SBI Small Cap Fund, and third being iPru Small Cap Fund. So it simply means that these three funds were not able to generate return over and above the benchmark. The next parameter that we'll be looking upon is this cumulative excess. Right beside is annualized excess. So annualized excess basically talks about the excess return that is generated on an annual basis. This is also something that you can sort, and you can clearly see that for quant, it is to an extent of 52.37%, whereas the least is by Aditya Birla, which is to an extent of negative 13.24%. Now, the next parameter that we'll be looking upon would be this beta. Now, beta indicates how risky a particular fund is. Now, you can sort this accordingly, and beta of index would always be one. That is something that is reflected right here. Whereas, if we compare it among the funds, we can clearly see that quant has the highest beta, which is to an extent of 0.87. So, what does this mean? It means that this particular fund is risky in comparison to its peers, but not as risky as the benchmark. Now, the other two parameters that we'll be looking upon in the relative return column would be up capture and down capture ratio. Now, up capture and down capture ratio tells us how the fund was performing when the market was in bull or bear run. So up capture ratio in simple words talks about how a particular fund was performing when the market was in bull run, whereas how a particular fund was performing when the market was in bear run is something that is indicated by the down capture ratio. Now, considering that both the index has up capture and down capture of 100, what does this actually mean? It means that when our benchmark was down by 10%, our benchmark was up by 10%, our particular fund was up by 12%, which is quant small cap fund. Whereas when the benchmark was down by 10%, our particular fund, that is quant small cap fund, was down by 7.9%. So in simple words, up capture ratio should be more than 100 and down capture ratio should be less than 100. Now, the next thing that we'll be looking upon would be risk versus return scatter plot. Now, this is risk versus return scatter plot, wherein you can customize your own start date and end date as well. So for that, let us take, for example, 2020 1st Jan, and then you hit on go. Now, as soon as you do so, the x-axis you would be able to see considers risk, which is standard deviation, whereas y-axis considers return. Now here it is divided into four quadrants. On left hand side on top, you can see it is low risk, high return. Bottom is low risk, low return. On right hand side on top, it is high risk, high return. And bottom is high risk, low return. Now, if a fund is plotted on the right hand side, it means that it is highly risky. Whereas if the fund is plotted onto the left hand side, it means that it is taking a lesser risk. Whereas if the fund is plotted at a particular height, it means it is generating higher return. Whereas if the fund is plotted at the bottom, it means it is generating a lower return. Now, as we were able to see in the main list, that quant is not only taking a higher risk but is also generating a higher return, is something that we can see clearly right here. So we can see that the risk that is being taken by quant small cap fund is to an extent of 21.37%, whereas the return that it has generated is to an extent of 36.95%. So it is not only taking higher risk but is also generating higher return. The risk and return of index is lower than that of the fund. So we can clearly see that Nifty small cap 250 has a risk of about 20.56, whereas return is about 25.05%. Now also you can compare two funds. Now for example, let us compare Tata small cap fund with that of IP. So you can clearly zoom this in. Now, as soon as you do so, you can clearly see that both these funds are taking similar amount of risk. Tata is taking a risk of about 17.5%, whereas IPRO is also taking a risk of about 17%. Now, the return that is generated by Tata Small Cap Fund is to an extent of 26%, which is higher in comparison to IPRO, which is again generating a return of only about 23%. So we can consider Tata Small Cap Fund as an alternate to IPRO Small Cap Fund, because though it is taking similar amount of risk, but is generating a better return in comparison to IPRO. So this was for risk versus return scatter plot.
Ma'am, can you just compare one quant fund with any other fund, please?
I would request you to park your questions towards the end of the webinar. We would take up all the questions towards the end so that the flow of the webinar is not disturbed. Ashi, you can continue.
Okay. So now next thing that we'll be looking upon would be this monthly SIP. Now here you can input an installment amount. Let's say you want to check what would have been the XIRR and the final value if 10,000 is invested from 1st Jan 2020 till 1st Jan 2025. Now for this to take it into effect, you would then require to click on Run a SIP. Now, as soon as you do so, you would be able to see what was the XIRR generated by each of these funds, as well as what was the final value that was generated. You can anytime click on the word XIRR to sort this in ascending or descending order. Similarly, you can also click on the word final value as well to arrange it ranging highest to lowest or lowest to highest. Now for quant small cap fund, we can clearly see that with the XIRR, which is highest, about 39%, it has given or generated a final value of more than 15 lakh. Now to get a detailed SIP breakdown, you can anytime click on this particular piggy bank icon. Now once you do so, a single fund SIP breakdown analysis is something that you would be able to find basis the date, which is the start date and end date that you would have input, NAV, units, as well as the values. Also, you would be able to see the final value at the very end. Also, you can generate a PDF report for the same, which can be sent across to your client. So for that, you would be required to click on this PDF icon. Now, as soon as you do so, you would be able to see the name of the fund. Basis the start date and end date, you would also be able to see the final value and the monthly installment amount that you have entered. And you can find a chart representation as well as complete monthly SIP breakdown, with last page being the disclaimer. And this PDF report will come up with co-branding on top left. So on top left, you would be able to see your company name and logo. Now this was for monthly SIP. Let us check what would have been the scenario in case if the client decides that they want to go for a lump sum investment. In
Sorry,
that case,
sorry, one question. The PDF value and this final value, both of them are different. Any reason why? Even the XIRR.
So as I mentioned prior, could we take the questions towards the end? We would be addressing each of your questions. I just request that no one to interfere between the webinar when it is conducted so that the flow of the webinar is not disturbed. We would be taking each questions individually. Just we request you to let us finish with the webinar flow.
Okay.
okay, so this was for monthly SIP. Let us check for lump sum investment. For that, you can anytime head towards point to point tab. Now here you can change the lump sum investment value from 1 CR, that is the default amount, to 50 lakh. Let's say what happens if 50 lakh is something that is invested in each of these funds. Basis a particular start date and end date, you can enter any start date and end date right here. It is completely editable and check what would have been the final value that a particular fund would have generated. Also, if you want to get a view in the percentage form, you can anytime click on CAGR as an option. And let's say the start date and end date you have entered is for a period of less than an year. You can anytime click on absolute as an option. Now let us custom the start date taking the recent bloodbath scenario going on in the market. So what we'll do is we'll pick up the start date as 1st Jan 2025. And the end date would be 30th Jan 2025. Now, as soon as you do so, you would be able to see all of the negative return. And here you can also sort this by clicking on the word sort. And here we can clearly see that HSBC small cap, it fell the most to an extent of negative 14.39%. Whereas if I click on the word sort again, we can see that IPRU, it fell the least, which is to an extent of negative 3.6.32%. Now you can also generate a chart view for the same by clicking on this chart like icon. And also you can generate a screenshot for the same. So this screenshot can be incorporated onto PPT or any piece of information that you want to share with your clients. So that is it for today's topic related webinar. The forum is now open for a Q&A session.
Hi. I just wanted to go back to that risk and return, metrics that you were showing, and you compare two funds, right? So ICICI and Tata. Can you help us go through the data for Quant and which is the second best?
You mean quant funds, right? Or
Yeah. I mean, in this sheet which we have in front of us,
correct,
she compared. You compared Tata and iPro, right? You
correct,
selected two. You said no, you can drag and select two funds.
correct.
Can you do the same with Quant and any other fund? Let's say Nippon or HDFC.
Sure. So now this depends typically on the time period that you set in. On top, you could see a start and an end date option. Let's say we take it for the time period of 5 years in the past. We will create two scenarios, 5 years and let's say a 1 year scenario. So now we have taken in right a 5 year time period that we are analyzing. Let's say we look upon quant small cap. In the time period of 5 years, quant happens to be in this high risk, high return quadrant, meaning taking in a higher level of risk in consideration to the other small cap funds that you have loaded in the compare section, and at the same time generating a higher return again against the list of all the funds that you have taken to the compare section. Now, let's say if I compare that with maybe a Nippon India small cap fund, right? Nippon India, you see, is considerably taking in lower risk than quant small cap and also is generating lower return than quant small cap. When we are comparing these two funds, we see quant small cap is generating higher return than Nippon and taking in higher level of risk than Nippon. Now, let's say we change this for a different period, maybe 1 year in the past. Again, the positioning of the funds would change. And this comparison is typically relative comparison, meaning bases the risk and returns, that is for each of the funds that you have added to the compare section, we are showing the comparison in this scatter plot. Now, if at all you see, quant has rather moved towards the lower section. From the high risk, high return quadrant, it has now come down towards the high risk, lower return, meaning it is taking in the similar level of risk as it was taking 5 years back, you could say, but is generating lower level of return. While the other fund that we looked upon was Nippon, which again is near about in that same range which it was in the 5-year time period that we were analyzing. So the positioning of quant small cap is something that has changed, you can say, in the last 1 year, that way, last 5 years, considering to the 1 year time period. This again, the comparison you could do across the list of funds that you've added into this compare section.
Sure, thank you.
Yeah. Yes, there was something related to the monthly SIP. Someone mentioned that it was not showing up correctly.
Yeah, when I saw the PDF,
Hmm.
this quant small cap fund PDF when you showed, no, the final value
Yes.
was showing some 14 lakh something.
Okay. Ashi, could you open the
And
PDF?
the IRR was also around 34%. I just want to understand what's that cap.
Okay, just a minute. Monthly SIP start date is 1st Jan 2020 till 31st Jan 2025. Could you go back to the platform main page? Here in this section, you see the end date is 1st Jan 2025. While in the report, the date was 31st Jan 2025. So what Ashi did was, she was on the main page. She clicked on the piggy bank icon to show you a detailed report, which opens up to this page. However, here it seems that she would have changed the date. From 1st Jan 2025, she would have selected 31st Jan 2025. And that is the reason you were able to see a difference in this page and what you saw on the main page that way. If you require, we can just try and open it again. Ashi, could you go back to the main page? Yeah, just click on the piggy bank icon. Yeah. Yeah, now it is coming up correctly.
Thank you.
Sure.
Madam, one thing is there where extended, sorry, just go on screen side.
Yes.
Yeah. Yes. Main list, on main list. Here, यहाँ पे आपका extend बीटा
Yes.
बीटा आपका लेके आइए ना कॉलम
So beta
column.
will be on the right hand side. You need to scroll using this smaller scroller. वो
Yeah.
आप लिखे आओगे तो ये पिंक कलर वाले कॉलम्स में बीटा आपको देखने
ठीक,
मिलेगा.
यहाँ पे बीटा में अगर हम यहाँ पे देख रहे हैं कि स्मॉल कैप इंडेक्स का बीटा 1 है कंपेयर टू क्वांट का 0.87 है. ये हमें बता रहे हैं कि यहाँ पे रिस्क कम है कंपेयर टू इंडेक्स
बेंचमार्क. करेक्ट, जो आपने बेंचमार्क लिया.
या
करेक्ट.
देन फिर आप जब रिस्क वर्सेस रिटर्न पे जाते हैं, यहाँ पे क्लिक कीजिए. टाइम पीरियड आप वो ले लीजिए 20 से. यहाँ पे हमारा क्वांट स्मॉल कैप की रिस्क ज्यादा आ रही है कंपेयर टू निफ्टी स्मॉल कैप 250 के.
हाँ जी, अरुणा भैया, द रीजन है सर क्योंकि ये जो आप रिस्क वर्सेस रिटर्न में देख रहे हैं, यहाँ पे हम क्वांट स्मॉल कैप को इंडिपेंडेंटली एनालाइज कर रहे हैं.
स्टैंडर्ड डेविएशन पे ले रहे हैं.
जी जी.
ओके.
जब हम बीटा देख रहे हैं वो बीटा अगेंस्ट निफ्टी है. सो उसमें ऑब्वियसली बीटा का फॉर्मूला जो है हमारा यहाँ पे हमने जो यूज किया है इसको वेरिएंस डिवाइड बाय वेरिएंस. सो जो टॉप पोर्शन है कोवेरियंस, उसमें निफ्टी का भी इफेक्ट आएगा. सो दैट्स अ रिलेटिव स्टैट. बट ये जो आप देख रहे हैं क्वांट स्मॉल कैप, ये सिंपल स्टैंडर्ड डिविएशन या वॉलिटिलिटी हो रहा है सिर्फ क्वांट स्मॉल कैप का.
ठीक. इसमें एक मेरा सजेशन था, आपकी जो मेन लिस्ट जो है, यहाँ पे जो हम डेट्स यहाँ पे चेंज करते हैं, वो डेट्स की मेंशनिंग यहाँ पे कहीं भी नहीं होती, जबकि आप उसको कॉलम में अगर यहाँ पे कहीं डेट का एक और आप यहाँ पे दे पाए, तो वो रिटर्न एनालिसिस करते वक्त या रिपोर्ट को रीड करते वक्त में काफी इजी हो जाएगा. क्योंकि कई बार हो सकता है कि ये रह जाए कि हमने यहाँ पे कस्टम स्टार्ट डेट तो चेंज कर लिया, बट जो बेंचमार्क का रिलेटिव बेंचमार्क है उसका डेट हम चेंज नहीं कर पाए हों.
हाँ जी समझ
वो
गए.
अगर डेट अगर आप यहाँ लोग आप लोग मेंशन कर दें कि इस कॉलम से लेके इस कॉलम स्पेसिफिकली डेट ये यूज हो रही है, इसके बाद अगर मैं कहीं कुछ और देख रहा हूँ तो वहाँ पे डेट क्या यूज हो रही है वो क्लियरली मेंशन रह पाए.
हाँ समझ गया, ठीक है. वी विल ट्राई टू डू समथिंग ऑन द इंटरफेस कि आपको क्लियर दिख जाए. मैं प्रॉब्लम समझ गया, क्योंकि आपकी अगर हो सकता है रिलेटिव रिटर्न का स्टार्ट डेट
हाँ
अगर रिटर्न कॉलम से अलग है तो फिर इशू हो सकता है.
बिल्कुल बिल्कुल बिल्कुल.
ठीक है.
एक चीज तो ये, इसके अलावा भी मैं कुछ आपके सॉफ्टवेयर के अंदर जो मार्केट्स में स्टॉक्स है उसके ऊपर कुछ क्वेश्चन या अभी ले सकता हूँ आपसे एक.
हाँ जी, बोलिए बोलिए.
आप मार्केट्स में आइए ना सर, मार्केट्स के अंदर स्टॉक पे आइए अभी. यहाँ पे मुझे एक चीज क्लियर नहीं हो रही कि यहाँ पे जैसे रिलायंस इंडस्ट्री है, इसका डिविडेंड यील्ड लास्ट 5 ईयर का एवरेज यहाँ पे डैश शो हो रहा है, डिविडेंड रेट भी डैश शो हो रहा है.
हाँ जी, ये मैं आपको बताता हूँ. देखिए, ये यहाँ पे हमने एक रॉयटर्स के थ्रू डेटा लिया हुआ है, जो याहू फाइनेंस के थ्रू आता है. तो वहाँ पे इशू होता है कि काफ़ी जगह हमने देखा है डेटा मिसिंग है. So at this point, what we are doing, we are actually the project is actually ongoing now. It's not just a potential thing.
ओके.
तो हम equities का डेटा पूरा रिवैम्प कर रहे हैं. हमने
हम्म.
दूसरा डेटा प्रोवाइडर भी ले लिया है. हम equities के लिए एक नया प्लेटफॉर्म पे काम हमारा शुरू हो गया. तो यहाँ पे because we have tried many times, you are right sir, यहाँ पे होता क्या है, lots of this fundamental data seems to be missing for even big stocks. So that is causing some issues. So whatever data is there seems to be fine, but there are many points which are missing. I can already see big stocks here which are missing data points. So we hope to have kind of a proper solution for you guys very soon.
Okay. Thank you.
Any more questions? Please let us know.
I have a question. While calculating Sharpe ratio,
Yes.
hello, can you hear me, madam?
Yes.
Yeah, while calculating Sharpe ratio, we know that formula for Sharpe ratio is return of the portfolio or the fund minus risk-free rate of return divided by standard deviation. So while calculating the return of the fund, is it CAGR taken or regressed? The return is regressed using single market index model or CPM?
So sure. So we are for calculating Sharpe ratios, we always use a simple return. So that simple return is calculated by taking the daily return over that period of time and taking the average of those daily returns and annualizing by multiplying with 260. So we don't use CAGR for Sharpe ratio calculations because obviously it's used as a relative figure versus everything versus other funds. Not just that, it's also used as a relative figure across time. So any effect of compounding is therefore taken away. So every time you see Sharpe ratio on anywhere in our platform, it will always be the simple return used for the return of the asset.
Right. Okay. Okay. Thank you.
Thank you.
Okay, I have a question.
Yeah.
Maybe if you can just put on any of the portfolio of mutual funds, then it will be more relevant.
Sure.
So assuming I have created a portfolio of a mutual fund. Now I want to look at the performance, compare it with the index performance or benchmark. Now what challenge we face is if I am adding a relatively new fund to the portfolio for some strategic reason, maybe it's a factor fund or something for reason I'm adding a new fund. The whole data gets skewed because that fund's performance or absence of that fund's performance contribution makes this as a laggard portfolio compared to the index. Is there any solution for that?
No, you're absolutely right. I mean, there are many different solutions. So I'll tell you what we used to do earlier is if you had even one fund that was, let's say, 1 year old and everything else was 10 years old, we would actually stop the backtest from running for more than 1 year. Now, that obviously caused a lot of issues because if you have a portfolio where you've just included a new fund, you can't run the backtest for a longer period of time anymore. So we opened it up where people can change the start date to go further and further into the past. And obviously what happens then is if you run a 10-year backtest where one of the funds is only 1 year old, the first 9 years will be unallocated and earn nothing for that portion of the portfolio. Which, as you correctly said, it will affect the performance and isn't really reflective of what you're holding today. Now, to solve that problem, obviously, one is that you stick to the fact that you use the minimum common start date, and we've given you that option at all times. You can just click this button and it'll start you off from the date where everything has data. But the only other solution when one of the funds is very new is to add some kind of proxy for the missing part. Now, this is where things get quite messy because what do you use as a proxy, and if you do use as a proxy, then the backtest needs to kind of make it clear, especially to the client, that fund number 1 is only 1 year old, but I'm showing you a 5-year-old backtest where the first 4 years, because I don't have data, I'm putting in something else. We've spoken to many of our users, and generally speaking, there hasn't been that much interest in substitution. I mean, if you have any suggestions on how to deal with this, we're open to it. But at this point, the only thing we can think of is in such a situation, we can give you an interface somewhere around here where you basically where you can clearly see that a couple of these funds are new. So the first, let's say, 2-3 years are empty and not providing a return. And then you get let's say, a bunch of indices or something to select from to fill that period up with returns.
Can't it be done like, okay, for example, first 5 years, 4 years, a particular fund is not there. Only for the last year data is there. So that 4 years, while the calculation is happening on the back end for comparison, can't the system do that calculation in a way that only those 9 funds are counted for that 4 years in the allocation?
Yes.
And
So, yeah.
because see, once we put up a report in front of a client, that time it's difficult for us because we need to show this particular fund in it. That time we cannot show that we are using a proxy. It will be like not so complex for a client to understand.
Yes.
Can't they do that? Maybe if the fund is not there from inception particularly, then absence of that particular funds period or an average can be added to it, something of that sort.
Well, the one solution is there, but we will definitely have to put a disclaimer for it. Is that, as you suggested, if let's say out of 5 funds, one fund is only 1 year old and the other ones are the 4 or 5 years old. For the first 4 years, what we do is, and let's say the portfolio is equally weighted, 20, 20, 20, 20.
Yes, 75% you carry from there.
Yeah, so then for the first 4 years, the portfolio will actually be made of 4 funds with 25% each.
Yes, that automated if it can happen, that will actually solve the problem.
So it's not that hard for us to do that. The only thing is that when you look at the backtest, it's most of the backtest, unfortunately, is going to be reflecting a 4-fund portfolio, not a 5-fund portfolio, as it may look on the report. So, which is why I think some reasonable disclaimers may be needed. That this is what has happened.
That should be fine. Yeah.
Yeah. So, yeah, Anshu, let's write this down. I think we could probably pull this off.
Yes, sir.
Yeah.
Thank you.
Thank you.
I have a question.
Please.
Hello.
Yeah.
Yeah, actually, can you go back to the previous tab where there were all the small cap funds were there? Compare section. Yes. So can you like tell me the reasoning behind that risk FS? How do you evaluate such things? For example, let's say Kotak small is 7.78, whereas quant small cap is 0.52. So how do you evaluate such things? The risk parameter.
Sure.
Yeah. Yeah. So basically, I mean, yeah, let's just pull up any fund, just pick up anyone. So we have a score that's usually shown everywhere, which is the NGEN fund score. Now that looks at basically risk-adjusted returns. But what we also have is a risk score and a return score, and they're very simple. Very straightforward, and the same process is used across all the meaningful categories. So for the risk score, what we do is we look at volatility, and obviously the lower the volatility, the higher the score out of 10. So in this case, when you see differing risk scores, the main reason is for a bad score would be high volatility compared to other funds in the same category. The only other thing that will also affect the score is the age of the fund. So we look at 1, 3, and 5 years. So if a fund is, let's say, only 3 years old, it only provides information for 2 out of the 3 main parameters. So that's usually what causes differences in risk score. But the risk score is basically completely derived from standard deviation.
So if we see that means that Kotak small cap is very less volatile as compared to other funds such as Quant and HDFC or all of that.
That's right. So and to put it specifically, if you go back to the main list, so Quant small cap and Kotak small. Okay, so they are both in the same category. So yes, so its volatility is lower than that of Quant. And as you can see, you can kind of approximately confirm it as well by looking at the standard deviation column. Quant is about over 20%, and Kotak is 16.5. So that will contribute to that score being low or high.
Okay. And lastly, I want to ask, for example, let's say Quant has outperformed every of its peers.
Yeah.
So can we figure out the reasoning behind why it is outperformed through this portal, NGEN Markets?
Sure. So the only proper way to figure out the reason why Quant is doing well, whether against its peers or even just on its own, would be to look at actual return attribution. So if you load up Quant small cap here, let's look at the stocks it's holding there in asset allocation. Now, we've seen other platforms do attribution, and the main issue with that is that obviously we only have monthly data. So if we calculate how much money it made from its, let's say, Geo financial position, the only 2 data points we have is what was its weight in Geo financial on 31st December versus what was its weight on 30th November. Now, we've done this exercise many times where we've calculated how much it should have made on Geo financial stock over from November to December based on the weights, and then done the same thing for the rest of the stocks. And when we compare the return to the return of the fund, even taking into account things like TER, it's very different. So attribution using monthly holdings only isn't a very effective way of finding out or breaking down a fund's return. Having said that, as I said earlier to another question, we are actually getting much better level stock data. And one of the things we are going to do is start showing you what this holding implied attribution is. So that should be coming soon in the next 1 or 2 months. And I think that's the real reason. That's the kind of the main pointer towards why Quant is doing well. I mean, if there's anything else that you think you want to see, let us know and we can try it out.
Okay, for example, let's say it has not performed well in the last 12, 13 months, but it has performed well like in the time horizon of 2 to 3 years particularly.
Sure.
So can we get the data at that time when it was outperforming its peers? What were the holdings of the shares it had along with the weightage of
Yeah.
such stocks?
So we can show you, if you look at positions over time, right now we show you the last 12 or 13 months. But there's a small project already on which will give you a little show more button at the end of this table. But you can see here, you can actually see the individual stock holdings. Just scroll right. Let's see how much it's showing right now. Keep going, keep going. Okay, so it's showing you about December, yeah, last year. So it's showing you about 12, 13 months. And you can download this in Excel also if you want to do some calculations separately. And what we will do soon is give you kind of a button where you can load the previous years as well. We should have about 2 to 3 years at least, maybe more, depending on the fund.
Okay, I asked you this question because specifically, like when beta is generally higher, then the chances are the fund will perform better, but the beta of quant vis-a-vis to index is relatively lower on the
Right.
lower end, but still it has outperformed it. So that is why I was asking.
Fair enough, fair enough. Yeah.
Okay, okay. Okay, thank
Thank
you so
you.
much.
Any other questions, please let us know.
Do you provide scores to individual stocks as well?
No, we currently don't have a scoring system for stocks, but this is something that will most likely be developed in our new equity system, which should be coming in the next 2 to 3 months. But right now, there's nothing.
Oh, thank you.
Okay, if there's nothing else, Anshu, we can close for it.
Sure, sir. Thank you everyone for joining in. You can anytime visit our YouTube channel and find a dedicated webinar playlist that has been created. So as of now, there are total 145 videos and today's video will be uploaded by next week. Thank you everyone and happy weekends.